We got 7 minutes till the bell. Stock's looking more red here. Nathan Peterson joins us from Schwab's Center for Financial Research. He's the director of derivatives analysis, and he's joined today by Mike Townsend, managing director of legislative and regulatory affairs at Schwab. Nate, great to see you again. Mike, I love your appearance rate because I get really excited whenever I see it. It means something big is coming. But hold the thought on the policy. Nate, let's talk markets for a moment. We're down a little. VIX is a little changed. I mean, we can't seem to get anything started this week.
Yeah, Oliver, we did talk about the negative RSI divergence on Tuesday. You look at the price action today, yesterday, look, first of all, my focus is more kind of near term for our more active trading audience, more lean on technicals, more lean on near term catalysts. So I'm being maybe, focused, really narrowly focused here when I talk about price action and where we close on the day. But yesterday we closed at the lows. It looks like today we're closing on the lows again today. One would think that with the benign ADP report and the initial claims that traders might want to be in stocks at the end of the day before tomorrow's open. So this kind of price action just tells me we probably have more of a pullback or consolidation period that we need to go through. If you look at the leaders in sectors today, healthcare, financials, real estate, money's trying to find a place that perhaps isn't as susceptible to some of that profit taking from the big rally from last year. But it's part of my thinking is if we get a benign non-farm payrolls report tomorrow, does that kind of re-emphasize some of the moderately hawkish tone that we got out of the FOMC minutes? Maybe that's what the market's thinking. We saw some of the probabilities for a rate cut in March pull back from about 88% on Thursday to about 68% right now. But the action's tentative. This does not look, it looks like we got more to go.
I like the point particularly about tomorrow because a week ago, or even maybe still, I might argue that most data outcomes are going to be well received by the market because, we've got hyper cuts in reversal price by the market and then cuts in reversal price by the Fed. So it's like, it seems like it'd have to take something monumental for us to get like a big tail risk surprise. But at the same time, the price action would argue, why aren't people then getting in the market today ahead of tomorrow's employment, right? So then maybe the thesis I just laid out is a little bit off. And maybe it's because we dropped from 85 or whatever to 60, which is crazy that the market would get nervous about that.
Yeah, exactly. And so, I'm in the camp that good news is good news because I thought the Fed and the inflation story was in the back seat and that therefore good news equals soft landing. So let's applaud that. But after the probability changes, maybe the market is still sensitive to wanting to get those 6 cuts this year.
Yeah, it seems like.
Given the price action, though, I think those technicals, the kind of the orange flags that I identified on Tuesday there,
that's true.
That is showing us that we just ran too much in 2 months, in the final 2 months, and we need to kind of, give some of that back still.
True. All right, so we got too hot and possibly even way too aggressive on the sincerity with which the market thinks that first cut is coming. If it doesn't like dropping if we're sensitive to drop from 80 to 65%, then all right, we're probably over our skis there.
Price action is suggesting that, yes.
Okay. Mike, let's talk some policy. We've been so focused on inflation and stuff, almost forgot that it's an election year. Of course, some argue, that that's maybe why we're cutting. What's the most important thing that you're thinking about right now?
Well, Albert, in the short term, we're watching a potential for a government shutdown later this month. So Congress comes back from its holiday break next week, and they've got a couple of deadlines coming right up. About 20% of the federal government is funded only through January 19th. The rest of the federal government funded only through February 2nd. They don't get a deal to extend that funding. We're looking at a government shutdown. I think chances are reasonably high that we do get a shutdown. Now, as we've discussed before on this program, the markets don't tend to overreact to government shutdowns. But if it's an extended one that goes weeks, then you're talking about a potential real impact on broader economic numbers. So it's definitely something to watch. And as you know, it's just crazy here right now in terms of the partisanship and the divide between the two parties. really hard to see how they get to some easy solution here. And that's not even mentioning the whole debate over Ukraine funding, Israel funding, all of which is tied to border security. So you got a host of issues kind of crashing together this month. I think it's going to be a really busy month here in DC.
Am I crazy, or has it been border specific that has held up previous functionality of the government?
Yeah, they've gotten really tied together now. Republicans are really pushing for tough border restrictions, more money for the border, and they say they're willing to shut down the government over it. We'll see if that's a hollow threat over the next 4 weeks, but these two issues have become really tied closely together, and I think that's going to dominate conversation here over the next month.
No, that definitely seems to be a pretty astute observation, that that's where the geopolitical funding is now kind of competing. Even, Musk is tweeting like imagery of people crossing the border and stuff. So it seems like it's become a hot topic thing. So then the possibility that, I don't know, at this point when the market's getting nervous about us dropping down, the rate cut from March to May, then maybe they will have a problem with the government shutdown for the first time ever. But Mike, one other thing here. You're watching the crypto stuff. Give me your read. What do you think's going on down there?
Yeah, lots of attention here right now on the whole crypto thing. And I listened with interest to your Bitcoin with Bob segment just a few minutes ago. There's a lot of speculation, obviously, that the SEC is going to finally approve the Bitcoin ETF, as soon as tomorrow or early next week. I'm a little more in the skeptical camp. Gary Gensler has been just openly hostile as SEC chair to crypto for his entire term. And I really wonder whether he's going to approve something without having the courts tell him that he has to approve it. So I think this is going to be really interesting to watch how this plays out over the next few days. There's certainly a sense here that it's going to happen. I'll believe it when I see it.
All right. Great stuff. Imminent. Obviously, the election 10 months from now. Let's talk about that next time, Mike, in your next celebrity appearance. Appreciate it, sir, as always. Hey, I love you too, Nate.
I understand.
Thanks, guys. Nate Peterson, Mike Townsend.